Jenny, what areas are we going to be looking at in terms of some of these social sentiments today?
So I was having a conversation with Oliver Rennick before about Dollar Tree versus Dollar General, and he seems to think that Dollar Tree is the fake dollar store because, or I'm sorry, Dollar General is the fake dollar store because they have items that are more than $1. He calls it the fake one, and then Dollar Tree is the real one. So Andy, I know you're seeing a difference in your data with purchase intent. What are you seeing between Dollar General and Dollar Tree?
When we look at Dollar General on LikeFolio's consumer purchase intent mentions, you know, what we're doing for both of these companies really is looking for people talking about doing their shopping at these stores. And what you're looking at right now is a chart of those purchase intent mentions over the course of time. And what we see here for the last year on a year-over-year basis, Dollar General, we only see a plus 2%, in other words, really flat purchase intent growth on a year-over-year basis. That's really not very compelling for a stock that's up 24 or 25% during the same time frame. And so we think Dollar General is considerably ahead of itself. The company's trying to reinvent itself and add some sizzle to what it offers in terms of fresh produce and things like that. But we think that they've got an uphill battle. On the other hand, what we see at Dollar Tree is kind of a different story. Year over year there, we're seeing growth in purchase intent mentions that is pretty substantial while the stock has been flat. And so you kind of got two opportunities here, I think. Dollar General simply ahead of itself from a stock market perspective, and maybe Dollar Tree not getting the credit it deserves for the growth that we're seeing, especially as we get into this most current quarter. We think there's an opportunity that Dollar Tree could actually come out and give pretty good guidance, while Dollar General may have to do the opposite.
Okay, now this, Andy, this is one of those great segments because as we're sorting all this out, now you've got Dollar Tree performing much better, but the stock has performed much worse than Dollar General. Dollar General stock is held in, but its purchase intent has been much lower. So this is getting that divergence that we love to talk about. It's happening right in front of our face. If you follow the show and look at all the data from Ben Watson to Andy Swan, you're getting kind of the information that you need to trade, more Dollar Tree, or more Dollar Tree, less Dollar General, correct? I mean, I can't even sort this out.
Hey, it's tough, Kevin. Wait till we throw in Family Dollar into the mix, which Dollar Tree owns. That's been the real anchor on Dollar Tree stock, I think, is this acquisition of Family Dollar. But our data shows that Family Dollar, at least the bleeding has stopped there. We're not saying anything really great is happening at Family Dollar, but Dollar Tree may be executing its plan of transitioning those stores pretty well in terms of that acquisition. So I think that albatross around the neck of Dollar Tree stock is about to be removed, and things could be pretty good for the company going forward.
So Jenny, before, when we were during the break, we were talking a little bit about shopping at these, and I admittedly I don't think I've been to either one of these stores ever, and I may be naive, but I'm thinking, aren't these just stores that sell knickknacks?
No. Okay, yes, we did discuss this before because we were giving Alex such a hard time about the fact that these stores are actually have a diversity of products that you wouldn't believe. I mean, when I moved out, I was so poor. I bought wine glasses, spices, everything at these stores. So they're actually very useful, and it's kind of hysterical. And that brings us to our first tweet, which says, inflation projected $1 ribeye steaks at Dollar Tree. Hot buy right here for Memorial Day. So this is kind of funny because we're not. This looks like it is $1. That was kind of our debate. Is this actually $1?
The first question that we have to ask is Alex made the obvious question: is this real? Was that real?
I think this is real.
I mean, it's got a picture, so it's got to be real. But I don't know if I consider those ribeye steaks or just beef that maybe is a little bit frozen. But nonetheless, though, it does appear to be more than just knickknacks, Andy.
Well, what we're seeing, if you look at Five Below, the success of that company, it's kind of the same phenomenon. It's these stores are able to attract people in for the experience of buying. And it is a lot of knickknacks. It's a lot of things that you kind of take for granted, but they're all cheap. And so you can go into the store, buy 4 or 5 things for $20 or less, and have a neat experience that you're not going to get on Amazon, that you're not going to get on Target.com. And so I think that's the real differentiator here. Dollar Tree's taking advantage of it. You see it at 5 below. Dollar General, like Jenny said, it's kind of the fake one. It's more like a, kind of wannabe grocery store. They're going to add fresh produce now and all these things. So it's not in that same niche, I don't think, in terms of experience, cheap, knick-knack, maybe a word for it, but they do have some good stuff like Jenny's talking about. Sometimes it's just fun to go in there. They just get deals on things because a supplier has overproduced or another store has closed down, and they have the opportunity to sell those through at a much lower price than normal.
Yeah, and I've actually bought a bottle of Windex before at Dollar Tree, and that was $1. And that is definitely not a knickknack. That is a home staple. So, but Andy, you mentioned something that I think is super important. And that's kind of this ability to be insulated from the Amazon effect, because these companies seem to somehow stay immune to Amazon throughout everything that we've seen in retail.
Yeah, it's a big deal. It's what we're seeing, kind of a macro theme that we're seeing is that the consumer is shifting behaviors. There's only so much you really want to do all of your shopping online. Yes, for the things you need that you can search for, it's a superior way to shop, but people still want that experience of going out, being social, putting their hands on products. You even see it like Dave & Buster's doing very well. Experience in these retail areas is becoming a real thing, and I think Dollar Tree's tapped into that, Five Below's tapped into that, Dollar General not so much.
And something that's really important in the midst of this week is this impact, I think, also from China. So our next tweet is from Chris, who says, Dollar Tree imports 42% of its inventory from China, and its subsidiary Family Dollar imports 23% of their goods. Subprime retail tends to outperform in market turndown, but a tariff-fueled recession will hit them the most. So do you think that's possible that a tariff-fueled recession will hit these companies the most?
Well, I think that's what the stock is showing.
Right.
Right. I mean, it's. Let's see. When did it break here? It looks like it hit 111.60 on April 30th. That's less than a month, and this stock is significantly lower from where it was. So clearly, the breakdown of the trade talks with China is affecting this stock in a very real way.
Well, and if what I've gathered is correct, Dollar Tree is the one that's true $1. I mean, if anything is going to have margin compression and really have some issues with, tariffs increasing their costs, they can't pass that on to the consumer. So that would really, really affect their bottom line if they didn't change their business model. But Andy, real quick before we let you go, just to kind of tie everything together here, Dollar General outperforming in terms of stock price versus Dollar Tree. It's up about 25% over the last year. Dollar Tree only about flat, but you're seeing the opposite in terms of consumer purchase intent mentions, up 2% year over year in Dollar General and actually up 16% year over year in Dollar Tree.
Yeah, that's right, and that's talking about the number of people talking about shopping at these places. This is not, a reflection of their margins or anything like that. We can't get into that, and so that's important to note. If I were going to take away anything from this segment, it's that our data is a little more bearish on Dollar General than anything, and on Dollar Tree we're a little more kind of in line or saying, look, maybe oversold at this point down here under $100. But there's a lot of risk in both of these names, and I think Dollar General, from a purchase intent perspective, its underperformance makes it a lot riskier going forward into this earnings call.